Hi, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Face. I think this is the first time I started right on time. I was pretty ready for this one. Have about 45 minutes maximum because I got to check out of this Airbnb and it's time to leave Rotterdam and head over to Amsterdam, where I will be speaking tonight at Bitcoin Wednesday. Let's go straight to screen share. Great steak last night. Shout out Daisy and shout out David. Thank you guys for the nice dinner last night here in Rotterdam. All right. Let's see, screen share. Let's go right here. So the webinar is up. The next webinar will be on entries, exits, and stop losses. It is very, very important. I mean, all you got to do is hover over and you see the description. It's a very critical part of trading. So people underestimate how important it is to have sound money management and the ability to do good entries, exits, and stop losses. So we should probably put up the next webinar, probably next week. We'll put up the registration for the next webinar because I don't want people to get confused. It will probably take place like 2 weeks after. It will probably take place like about 2 weeks after, and it will be about money management. So money management is slightly different than entries, exits, and stop losses. And unless you attend both of them, it's going to be hard for you to really realize the difference. So yeah, you can still buy the on-demand intro to trading. That's basic TA, TD sequential. That's the more advanced stuff. And I'll be doing more webinars once I'm done with these. We'll figure out which way to go. Also gonna think about doing a 2-day option webinar, but that one is gonna be very expensive. Just giving you guys a heads up. Like I don't want to teach options to people that are not financially secure. So there'll be no discounts and it will be very pricey. And I mean, you can also learn it on your own for free, right? You don't have to learn it from me. All right. Calendar. So this is where I'm speaking tonight. It's about an hour drive from where I am right now, so it's not a big deal. Amsterdam's Bitcoin Wednesday. Right here, you can click on this link and that will take you to Bitcoin Wednesday. Please register. I don't know how full they're going to be. Pretty cheap. It's about 20 bucks, 20 euros. So it's very cheap for a meetup. It's a very good meetup. I love speaking at this meetup. Let's see who's speaking there today. And there I am. OK. I get a different title everywhere I speak. So, oh, we have a Bitcoin core developer. Oh, Eric Wasco. Awesome. Haven't seen him in a while. Oh, Stefan. I know Stefan. He was we were speaking in London together. And Kill and Raj, him I'm not familiar with. So I know these guys. I know Cal as well. So I know 3 of the other 4 speakers. So that's going to be good. It's going to be great. Looks like he's an atomic swap expert. Great. OK, cool. That's pretty much it. If you guys want to support my work, check out the affiliate page. There'll be more things coming, but I always say that and then I don't get around to it. If you want to buy a t-shirt, check out the store. If you want to learn trading, go to Learn Trading. OK, let's go to the charts. What do we got on the live viewers right now? 300. Oh, I guess the US is sleeping. It's all good. All right, they'll catch it after. This is the hyperwave look, which, remember, guys, I'm not, to me, hyperwave is useful, but it's definitely not for short-term trading. And it's more for long-term investing. And I do need to spend more time with Tyler, but I was paying attention to it. But we're paying attention to the hyperwave on the back end. You really need to pay attention to hyperwave on the front end. Hyperwave isn't very useful on the back end, other than it's telling you that lower prices are possible, which I don't need hyperwave to tell me that lower prices are possible. I was a big enough bear without it. Let's look at this, okay? Look, I have not yet ruled out the possibility that we are dealing with a prolonged bear market. This is the Van Zandt view of the situation, okay? If I back up, I really should be looking at it kind of this way. If I back this up, the only way we could be dealing with a prolonged bear market is if the current run-up is more equivalent to this run-up back here from March into June, which ironically is exactly what we have here. Well, maybe not from March. Well, March is when it accelerated, not when it hit the low. Now, this would be catastrophic, right? Because if the current run-up is this run-up, that means we are gonna go down to like $1,000 in the year 2022, and that would be absolutely catastrophic, right? Now, Willy Woo's work of on-chain volume kind of dismisses this possibility, and that seems to be the more likely view of the situation. And now that leaves us with how bear markets end, and this is not typically how bear markets end. Like, this is not how I've never seen a bear market end like this. So, like I said, I need a secondary low in order to evaluate the end of the bear market, or a very long consolidation. Right now, we are dealing with a TD9 sell on a weekly scale. We should look at it here because it's more real time. And as you can see, we came down to test the moving average, and we have bounced up. So today is Wednesday, obviously, because I'm speaking at Bitcoin Wednesday in Amsterdam tonight. So, to go back here. So the week is not even halfway done, right? Because the candle flips over. Candle flips over on Sunday. So the candle is not even halfway done. And we don't know if the 1 to 4 candle correction is already over or not. Like we have no clue. If I have to guess, I think that there is more correction left in this move. So I do think we are going to go lower. Do we have to go lower? The answer is absolutely not. Look at it from a daily scale. From a daily scale, we're kind of sitting in the middle of nowhere. We had our red 2 going below a red 1, and as a trader of the sequential, this becomes a potential shorting opportunity right here on a red 2 going below red 1, and it fell very, very quickly. And now we're bouncing, and a reasonable place for a bounce would be back to the level of the breakdown. Now, the level of the breakdown, sorry guys. I tried to mute, and that was a total fail because my mute button wasn't readily available in screen share. Sorry about that. So the area of the breakdown where we're pulling back into right now is between these two lines. Both of these lines are reasonable. Shift here. Both of these lines are reasonable pullback targets. I don't think they're straight though. There we go. Now they're straight. Both of these lines are potential pullback targets for the current run back up. But we have to look at lower level timeframes. So the 12-hour time frame is on a 5 of 9, telling you that there's 4 more candles of downside. The daily is just getting started with a 3 of 9, and the 4-hour, which did kick off our 1 to 4 candle correction yesterday, had fallen. Now notice the 4-hour bounced right off a critical moving average. That's the 200 period moving average. And also could not close below the setup trend line. Setup trend lines remain very, very critical. At the moment, we have a setup trend line at the top and a setup trend line at the bottom. So there's two of them. This one is coming from the green support line is coming from back here that created this 9 up there. Okay. This 9 here. Okay. Then we have this one here that created this 9 here. So right now, I think this is just a pullback to the upside, and I think this should be ready to turn any minute to the downside, because according to the short-term time frame, you have come back and back tested the area of the breakdown. Okay, so this run up might be ending like now. Here's the 1 hour chart. Can delete that. The 1 hour chart didn't quite get you down to a 9 for a good pickup of a reversal. A 1 hour chart is just consolidating until the moving averages catch up. So if you ask me right now, I believe that we are going to go lower. I do not think that 7,400, what was the low here? 74.32. I do not believe this was the low of the pullback. I think we're going to go lower. Now we can double check what the range of this pullback has been, right? So if I hold the shift button, put that there, put that here. So we are now down 18.5% in a couple of days' time off the high. Okay, I'm using the weekly chart. The daily chart might be clearer actually. So how far are we down in this correction? So again, I'm going to hold shift. I'm going to click that. I'm going to click this. So no, it's got to go lower than that. Zoom in. Better. Oh man. There we go. We're down 18.5%. Okay, so I was right on the weekly chart. 18.5%. So that's what we're down. Now remember what I said. I wanted a 30 to 40% correction. Okay, that's my target. My target is a 30 to 40% correction, but I didn't know from where. I was hoping it was from 9,500, 9,400, so I can short it. And it needs to be more than a flash crash. So right here, we fell 26%. So a little more than that, 26.5, because I didn't start at the top, right? So I actually want to see a fall that's bigger than this fall, and not in 2 days. I want to see it over a few weeks. Okay, so that's what I'm looking for. My targets for the correction are, my most conservative target for a pullback is really in this $6,400 vicinity, right? So if we do fall down to 6,400, what percentage is that? Right here, right? That is 32%. 30, yeah, let's just do 33%. Okay, so that is my most conservative level for a reasonable pullback for me to get back into the bullish trade on a buy the dip scenario. There's other ways for me to be bullish, but as a buy the dip, I need this dip to come down to 6,400. Now, that's the most conservative target. Just like in the bear market, my most conservative target was 5,000. My middle of the way target was 3,000. And my ultimate pullback low target was, 1,500, 1,300. Same thing here. My most conservative pullback target is 6,400. What is my middle of the run pullback target? Well, my middle of the run pullback target is down to this consolidation area of 5,100, maybe meet that moving average. Somewhere in this vicinity of 5,100, that takes us down to a 43% correction. And my ultimate low on a pullback for a buy the dip is back to the low 4,000 area. And that takes us to about a 50–55% correction, which is, again, reasonable and doable because it's Bitcoin. If we go back to the 2014 market, right here, these are weekly candles. And from this high, down to this low, that is a 40% correction. Okay, so that's the middle, the middle target. Okay, right here, can try one more time. That is a 38% correction. Okay, right here, 37% correction. And right here, a 32% correction, right? So in less than a year, right? So from November up until March of the following year, sorry. So in about 15 months, we had 1, 2, 3, 4 corrections of greater than 30%. And we can even check this one, see if it was greater than 30%. No, it wasn't. It was only 25%. Okay. So they happen quite often, and I will wait for it to happen again. Now, the probability that the bottom is in is now higher than 50%, but only slightly higher. I have not yet completely ruled out a possibility of going sub 3,000. And there's no reason for us to talk about going sub 3,000 until Bitcoin is in the vicinity of 4,000. Someone is asking me if I saw the news on Kin. Guys, of course I saw the news on Kin. I was all over Kin in 2017 when I said that the CEO is gonna get in trouble with the SEC. So if you just go to my Twitter, guys, before you ask me questions, I always do that. I don't know why. My email is public, but I don't reply to anybody, so it doesn't really matter, right? How do I? If you just scroll down, I don't tweet that much. Oh, the mining stuff I was tweeting a lot because that was interesting to me. Here it is. Here's what I wrote 2 years ago. 2 years ago. Right here. So if you go back to my Twitter feed from 2 years ago, here I am explaining how Kik is breaking the law and how their CEO is a total idiot and he's probably going to go to prison for it. And this is what happens when you trust Ethereum and you don't understand what you're doing. It's an American company with an American CEO who decided to create an illegal security for a real company, right? I mean, it's one thing to create an illegal security for, like, you know, a company that doesn't exist. It's another thing creating an illegal security for a company that does exist. You get in a lot of trouble. So, so here I am pointing it out that the guy really is dying to go to prison for financial violations. And I did this 2 years ago. It was obvious. And of course, bag holders were upset 2 years ago of reality of the situation. All right, let's go back to. Oh, it was really cool flying a plane, by the way. Really awesome. You can check it out. The whole sequence. Coming in for the landing. All right. What's wrong with, hold on, am I still streaming? Yep, cool. Someone's asking you for my thoughts on the 30. Oh, what's going on? Someone is asking you for my thoughts on the 30 MA on a daily. Guys, you choose your own moving averages, right? I'm not really. All right, I want to look at traditional markets. But by the way, did this upswing to 7,800 is likely over? I mean, like the markets can do anything, right? But right now, I would be based on a 4-hour chart. I would be looking for a rollover. I wouldn't be shorting it right here, but I would be looking for a rollover, because if we roll over right here and then we start consolidating in the $7,600 range, right around the setup trend line, right around the rising moving average, and if this area cracks, if we go below 7,600 again, we're probably going straight down to 7, because there is nothing here. There is no support. This is the problem. People think we're going to the moon, but the problem is you don't create any significant levels of support, and you end up in a lot of shit if this breaks. If we close below these two support points, like if the current run up does not get us to new yearly high and we go below 7,500, 7,550, we go below this cluster, there is absolutely no support. It's just like an elevator down. There is nothing there. I don't need to look at the volume profile. I can tell you what it says. All of these people that bought in are probably going to start to panic. And then your next level of support, if you're lucky, is here. Wow, that's not even 7,000. That's like down in $5,000. What the hell is that? Like there's no support anywhere. And I can extend this, and then maybe it's here, right? The point is, this is open air, complete open air. And I wouldn't want to be in this zone, right? So I don't see anything here. I saw Tyler's last video where Tyler was saying that if we fall to the $6,000 range, he's a buyer, approximately in the same area as last time. I disagree with that view. I don't see anything in the 6,000s that warrants a buying opportunity based on prior run-up support resistance. Now, there could be other things, like the way we're moving through the 6,000s could give you a buying opportunity. But looking at it right now, from the current point of view, I see nothing. It's complete open air until like this consolidation zone. And most likely this top here, which is at 5,600. There's just nothing here. We can look at it on a higher level time frame, and you can already see we're going below prior swing lows. You have a setup trend line here. So like I said, maybe other metrics, maybe other time frames. You have a setup trend line here that can hold you at 6,700, and this one is already over, but then there's nothing. There's absolutely nothing between 58 and now. Like it's just open air to the downside, unless the sequential can give you can end the momentum with a 9 or a 13, I would not be buying in this zone. I would not be, let's put it this way, I would not be looking to buy the dip in this zone. I am looking to buy the dip. Well, if you take 30%, that gives you low 6,000s. But I would want to wait for lower prices. And the daily chart, oh, that was the daily chart. And the weekly chart is calling for up to 4 red candles. And considering how bad the first candle has started, this could be pretty, like, how bad can 4 red candles get? Well, let's look at what happened when we broke out of the triangle, right? Or let's look at what happened the last time we hit the $8,500 area, right? These were 2 weeks, and in 2 weeks, we basically fell from 8,400 down to 6,000. Now, the only significant support of 6,000 is that it was prior support in the past, but I don't see it that way as a good current support point. But it is a 30% correction, and Bitcoin historically has bounced off of 30% corrections. Also, I already drew like the Fibonacci's. So from here to here is 6,000. So take off 33% from 6,000. That's a third of 6. That's a $2,000 drop. So that also takes you. So there is some reason to buy in the $6,000 range, but at the moment, it's not enough for me. Someone is asking about the Litecoin halving in August. We should probably ask me in August. I think Litecoin is totally useless. I think that the halving of Litecoin will significantly hurt Litecoin because unlike Bitcoin, smart people don't hodl Litecoin. So by not hodling Litecoin, you're mining it and instantly selling it, and you have zero speculative need for Litecoin. Okay, let's look at traditional markets. I'm actually really curious how how S&P is doing. So wow, S&P bounced strong yesterday, very strong. And it makes sense. We hit a 9 on a daily. The momentum has been running out. Today we have broken through resistance, but the cash market has not opened yet. And this is another reason why my code, I believe, is superior, because it notifies you of 9s that don't actually complete as 9s and turn into price flips, which I believe are good indications of follow through and upside. The weekly is doing well. I really wanted this to come down a little bit, but everyone makes fun of me for being bullish the S&P 500. I still think we're going to go to new highs. I always said new highs next year, not this year. But if this gives you another good week of upside and the red count breaks, S&P 500 could go to new all-time highs like this summer. I have not ruled that out at all. The euro gone up a lot. That means the dollar has dropped significantly. And if the dollar dropped significantly, that means gold is probably up significantly. And it is. There goes gold on the dollar drop. Gold has just broken setup trend. That is a good sign for gold. Now remember, until gold can break 1400, I remain skeptical on gold, and new lows are more likely. If gold can break 1400, I would love to see a consolidation around 1375. And for this consolidation to last into year end, and then I would love to buy the gold breakout. Silver, same thing, but way weaker. Oil, considering how much the dollar has fallen, oil has not really bounced much, but hey, oil has its own structure, right? Oil came down into a 9, gave you a reversal candle, and is now holding up. So if I was, considering how much oil just fell, how much did oil fall? Oil is down 22% since the top earlier this year. That's a pretty significant correction. Oil is completely rolling over, and maybe it's due for a little bit of a bounce. And I still think that lows in oil are coming. Here is weekly oil. Oil hit its lows a few years ago, and we'll see what happens. I think these lows are in danger. Weekly oil says we have more room to the downside. We can definitely, swing up a little bit here over a week or two and then go back down. Yep, so GBTC is down a lot. Ooh, GBTC premium is down a lot. Interesting. I actually have to adjust. I think I'm still using February numbers. I got to adjust the code a little bit. I have to adjust the parameter. BTC price per share on valuation day. So I got to adjust my formulas here. These are custom scripts. You guys don't have those. GBTC. GBTC. Oh, we hit a new month, so I have a new parameter here. Shares outstanding, Bitcoin per share. Jesus Christ, I hate pop-ups. As of May 31st, excellent. Yep, we just completed this. So I need this number here, and I need to put this here. It was 000985. And now it's 00098080. Okay, so hit OK on that. That's my latest parameter. Okay, it doesn't change it by much, but you saw it adjust a little bit, right? So, and you can now see the GBTC premium. Now it's 15.35% and not 14.70%. So these little adjustments, and I have to do it monthly. I still have to find out from Grayscale, do they compound, monthly, weekly, daily, quarterly? Oh, it can't be quarterly. So it's either monthly, weekly, or daily compounding on their shares. So here's my GBTC premium, and it's coming down. GBTC premium is down at 15%. That's pretty low. If I slide it back to here, GBTC premium was only 8%. I would love to see the GBTC premium in that under 10% range, and that could be finally another buying opportunity of Bitcoin in my retirement account. But I would love for the price of Bitcoin to drop. So right now, this would be the price of Bitcoin without the premium on GBTC. That's the orange, that's the blue line. So the blue line is at 7.9, and that would be the price of it. So I would love to buy GBTC in that $5 range with a premium of under 10%. That's what I'm looking for. And then I can go into GBTC with my retirement account. Tone, what do you say about investing in STOs? If they're real STOs, you would not have the opportunity to invest in them. Hey guys, I'm gonna see if I recognize any names for more moderators. I added a few moderators yesterday. Hey Marina, thank you for your comment the other day on my YouTube right before I took down comments. Let me know if you want to be a moderator. I gotta double check with my current moderators who they approve of, because I don't watch the chat as closely. I'll Bitcoin Motorist is in a time zone where he's not awake, but oh, hey Zizo. Yeah, I've been meaning to make you a moderator. You weren't on yesterday. I'll see you in Amsterdam like Thursday or Friday. All right, let's take a look at some stocks. It will be interesting if Bitcoin keeps pulling back. Yeah, that's a huge rise in gold. And the question is, this is the weekly gold. Would I have caught this big jump in gold if I was paying attention to gold? Well, traditionally speaking, here we're bouncing off the moving average, but that's not enough for me. If I was to trade gold, I would not have entered gold until Monday. This is where gold is a buying opportunity for me, unless I'm trying to catch a falling knife off the weekly 9. And if I'm trying to catch the falling knife off the weekly 9 and I'm still in the trade, then I'm still in the trade. But if I wasn't, and for me personally, when these two candles were happening, I am now considering this 9 more as a continuation 9 into the countdown phase than I am as a reversal 9, because the reversal did not happen immediately. But over here on a green 2 going above a green 1, I am bullish. Breaking setup trend makes me more bullish. But if I'm not in the gold trade yet, I'm not going to chase it. It's too late. Like this thing has just moved from 1269 all the way to 1340. That's a big move for gold. If you didn't get into gold at like 1310 area, I wouldn't be getting into it now. I would look for other better opportunity, less risky opportunity. On a daily scale, what did that mean? On a daily scale, daily scale was better, right? So on a daily scale, you had a 5 going above the 4. Oh, and a daily scale is giving you a 9. So if I did get into this trade, which I did not, and it would have been difficult for me to get in because I would have required me to buy a 5 above a 4, maybe it would have been a 3 above a 2, but then I might have gotten scared at the bottom and taken the loss. Oh shit, I gotta check out my Airbnb, guys. And but I would not be, this would be on a daily scale, this would be chasing because it's kind of late. On a daily scale, you want to be in way earlier. And right now I would be taking my exit based on a daily scale sometime today, because I wouldn't trust it. Now, because the weekly is only getting started on the upswing, I would only look for a 1-2-4 candle correction on a daily and probably more upside. So it's time to be bullish gold, but I wasn't really paying a close eye on it. Maybe we do need that notification service, but the notification service wouldn't have helped me because I'm not going to notify on green 3s above green 2s. I notify just 9s and 13s like the professionals do. All right. I don't really want to look at stocks. But we can walk through them. I think there was one stock with an interesting 9, but I already forgot what that stock was. Was it Tesla? Oh, wow. Look at that. Look at Tesla yesterday. Holy shit. Yeah, the notification service would have worked. That's for damn sure. I think I did my video around the same time yesterday, and I think I would have said I would be looking to get into Tesla. I got to double check what I said on my last video. But yeah, this was a 9 when the candle started, and boom. And it's the kind of 9 that Wall Street didn't even see. So it proves to me that, the concept of momentum works with this indicator, even if the majority of professional traders don't see it. Yeah, beautiful, beautiful on Tesla. If you bought Tesla yesterday, you did well. That's a good move on Tesla. And I'm looking for follow through today. So it opened at 180 and it closed at 193. That's a good move. I want to see what the pre-market is. Tesla is up 260 in pre-market, so that's great. It's really good. Really good. And it's got room. This is nothing now. So you have room until the declining moving average. That's the 20. Yep. You have room until the 20. At least. At least. Yeah, that's a good one. Whoa, look at GE. Another one. Look at that. Another nice, huge run off the 9 on GE. Yeah, the panic in social media is slowly ending. Nah, still not looking good. I want to keep an eye on Lyft. Man, I still want to buy Lyft sub $40. I really do. Uber isn't doing anything. Uber's not interesting. Though Uber can break out. I'm way more bullish on Uber right now than. Yeah, Uber was not a bad buy yesterday. Green 2 above a green 1. Stop loss down here. All right, that's it, guys. I got to get going. I got to check out. And but Bitcoin Wednesday tonight in Amsterdam. I have to get there actually. And I'm doing another webinar. Entries, exits, and stop losses. Very important. Probably not as important as money management, which is going to be my next webinar, right? So this one will be July 14th. I should be back in the US, I think, by then. Still traveling for a while. Look, you have Amsterdam, then Berlin. The blockchain cruise is in between. You can still buy the other webinars on demand. I will be in Dallas, Texas as well. I'm really cutting back on in-person workshops. They're just somewhat inconvenient and like not scalable, but webinars are scalable. So the next webinar, entries, exits, and stop losses. Read the description, and it's pretty useful. Okay, so I'll see you guys there. If you want to know my travel schedule, please check out the public calendar. Okay, and I will talk to you all on the next one, guys. How do I stop screen share? All right, cool. Bye, guys.